Hello there, Maverick traders. This is Rob Reinhold. It is October 8th, and let's jump into what happened today. In this session, we're going to be covering the news. We'll take a look at the commodity markets that have definitely been moving lately. We're going to take a look at some of the markets, look at the sectors, and then I've got 2 bulls and 1 bear for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, if we take a look at the numbers, it was a bullish day for sure. Dow up 0.3%, S&P up a full percent, NASDAQ up 1.5%. The underperformer was the Russell, and that's due to some higher interest rates that we've seen in the last couple of days. Big fall in the price of oil, 4.2%, and gold went down as well. So the real story here, the bond market has come back up to 4%. And if you remember, about 6 months ago, 8 months ago, interest rates were rising. And pretty much the only thing doing well were the Magnificent Seven. And it seems like that's kind of back. So we've got interest rates moving back up to 4%. And it seems like the large cap is doing much better than the small cap. We did get some relief from oil. Oil was moving back up into the high 70s. Now we're down about 74. We'll have to see what happens. There's a lot of tension over in the Middle East. So this is going to be something that changes every single day. Looking at the internals of the market, we can see that basically half the stocks went up today, half the stocks went down today. So think about this. NASDAQ up 1.5%, S&P up 1%. Russell basically not up at all. It's telling you that the large cap is definitely outperforming the small cap at this point. We've got 61% of stocks above the 50-day moving average. That is not overly bearish territory. Not overly bullish territory whatsoever. Looking at this chart. All right, I want to kind of break this chart down because as traders, we really like it when things are very clear and do exactly what we want them to do. And if you take a look at everything in this chart, we broke out. We had a very orderly pullback. We had a nice doji, and then we had this nice confirmation candle. Now, in all the textbooks, this is a textbook bull pullback. It pulled back basically right above the 20-day moving average, right at the resistance line or support line. And then yesterday, we got this absolute trash candle. Now, I talked with a few traders who they got bullish. They got bullish on this candle here, and they were feeling quite dejected after this candle here. But as you can see, one day later, and guess what? Everything looks fine again. This is where as traders, it's difficult if you don't take a step back. If you just are so looking into what happened today and you don't take a big step back, you can definitely make some mistakes. Like someone could have bailed on all their bullish trades just from yesterday's candle because they thought, oh my gosh, it's not a clear bull pullback. It didn't break out to new highs. Well, look, at this point, we have to call this more of a base. But once we break out of this 57.70, I think you can see we are definitely going to be moving higher, and we can just go ahead and take this trend line and say the next run is probably somewhere up to about 58.50 on the S&P. That is the chart in the S&P. We take a look at the NASDAQ. Same thing here. NASDAQ, yesterday's candle was absolute garbage. Anyone who was looking for continuation got really dejected. But if you just step back, look at the big picture, say, hey, I'm going to be in these trades for a week or 2, or 3 or 4, let the trend work in your favor. This is an uptrend. A lot of times these little bounces get messy, and sometimes they don't do exactly what we want when we want them. But you will see that over time, the trends win in the end. So everything here is telling us the bullish market is still here. There's nothing that's changed as far as the charts go. As you can see, the heavy green is in large cap. Large cap tech, NVIDIA is up like 13% over the last week. I mean, everything here is just solid green. Outside of that, it's peppered. It's peppered in energy, you can see, getting hit the biggest today. Has anything changed? The answer is no. Nothing has changed. We're still at a plus 3 market. We're above the 20. We're above the 50. The slope of the 20 and 50 are sloping higher. It is still a plus 3 market. So that means you want to be overly bullish in your trades. Now, that doesn't mean 100% bullish. Look at Maverick. We don't ever go 100% bullish, because if you do that, when you're wrong, you get really big drawdowns. And having big drawdowns mathematically is very difficult to get back from. Again, I'm just going to do just a little common thing of math, just so everyone gets it. Let's say you have $10,000 in an account, and you take a 25% drawdown. You know what? Let me make the math easier. You take a 20% drawdown. Okay, so you're at a 20% drawdown. You think, okay, I got to make that 20% back up. Wrong. You have $8,000 capital. If you make $2,000 off that, that's 25% you need to make back. So all of a sudden, you need to be way better than 50-50 and a 1-to-1 risk-reward ratio just to get back to even. If you take a bigger drawdown, let's say someone took a 50% drawdown, you have to now do 100% to get back to even. So now you've got to be twice as good to just get back to where you were. So keeping drawdowns small, I know that you're quote unquote leaving money on the table by not going 100% bullish, but trust me, over an entire year, your equity curve is going to be much happier and your drawdowns are going to be much less significant. So I've got 2 bulls for you and 1 bear for you. I really liked Robinhood here. Take a look at that on the chart on your own. It's up 10% for the day, probably cools off, but I think Robinhood looks really good. I've been talking about this app loving for a while. I've been talking about Carvana for a while. They all still look great, but they've had runs. I really like this Kava, which is a restaurant stock. But I'm going to give you 2 new ones here today. And this is a stock I have never traded before. This is a biotech, ADMA Biologics. Just a beautiful chart. Beautiful chart. We've come up here, we based, and you can see after this 3 weeks of basing, we've broken out to the upside. Where is the next potential target here? Well, I'm going to say 2150 to 22. Take a look at the options on this. You might have to go up to a 2250, but a 2250, if it doesn't have dollar strikes, is going to be that. If not, I like a 2022 on the upside for ADMA. Next one is another restaurant stock. I've been talking about that CAVA. It's had a nice run. This here is Sweetgreens. Now look, it had a big day today, up 10%. And a lot of times, as a younger trader, I'd look at this and say, ooh, 10%. Well, look, 10%, it matters where it happens. So if you take a look at Robinhood already broke out and had a 10% run today. So it already broke through the wall. And now this huge surge is most likely, short covering, is people rushing to get in, probably pulls back. But when you have a 10% surge in a day and it pushes it out of a resistance area that's been in place for about 2 months, we're talking differently now. We're talking differently. This thing still probably has some room. I don't think it's going to have another 10% day tomorrow. It's probably spent a lot of gas. I don't see any reason why this doesn't creep up. I like 40. 40 is a target. So that's going to be the upper strike on any option spread I do. If there's $1 strikes, that means I'm doing the 38.40. If there's $5 strikes, I'll have to do the 35.40, which will make it a slightly theta positive trade, but still just a perfectly fine trade. On the bear side, I went back and forth between a few stocks and I came up with Ford. I am not saying that Ford is going to drop and go significantly lower, even though it is in a nice descending triangle pattern. I don't think, again, the market is going up, and this is a bull market. So that means that even the worst stocks don't go down as fast as they would if it was a bad market. I think there's plenty of money to be made on this trade just off of a theta positive trade. Now look, if you did something like a $10, $11 spread, it's right in the middle. That means this is going to be $1 risk, $1 reward, 50-50. But forward has 50-cent strikes, so you could do a 10, 50, 11. So basically you're saying, I'm going to get in a credit, probably about 20 cents. So you'll have 20 cents of upside, 30 cents of risk. But the trade is, I just don't think it goes up. If it goes down or sideways, you're going to walk away with that profit. And then of course, if for some reason it has a huge burst and closes up above 11 by your strike, you're going to have that 30-cent loss, which is capped, and that's the trade. Let's talk about what is likely to happen tomorrow. I've been saying this for a while, that the velocity is likely going to slow down. We've had a big run, and here we are. Yes, we're working our way to all-time highs, but we also have the unrest in the Middle East, higher oil prices. We have the election that people are worried about. So we have all these things that potentially is keeping money on the sideline. Enough money is coming into the market that is going to probably grind higher, but I think large pockets of money are waiting until after the election. Waiting for the election to be over, waiting for this tension in the Middle East to be over, waiting for other things. I think that's when the velocity comes back. We are going to be entering into earnings season here in the next week or two. That also could bring some of that money in. But for right now, the week before earnings, I just don't see any real reason to be wildly bullish. Even though we are at a +3, probably a grind higher. As far as economic reports go and earnings reports go, there is really nothing of note on the calendar. So I think it's just a slow grind higher. These are not my favorite markets, but guess what? We have to trade the market in front of us. So slow grind higher is likely the case. Thanks for joining me. Goodbye, everybody.